NIO was supposed to be China's Tesla. It went from $60 down to $3. Now it's quietly creeping back up. And the FSR has a very specific opinion about what's happening right now. This is NIO, 1 year of daily data. Predictability score, 65%. Average rolling score, 91%. And this chart is telling a story that the US-China trade war narrative is completely ignoring. 1 year ago, it was at $4, flat, dead. Nobody cares about NIO. The EV hype is gone. The competition from BYD is crushing them domestically, and American investors have completely written this off. FSR starts strong, 95, 96. Even at $4, the trend is mathematically consistent. This is a stock going nowhere, but going nowhere in an orderly fashion. Then around interval 37, something changes. Price starts climbing, 455, 556, 650, peaks at 750, interval 90. What happened? Two things simultaneously. China stimulus rumors and short covering. NIO has one of the highest short interest ratios of any EV stock. When it moves fast. FSR drops to 75% during that spike. Interval 61 to 67, the move was too fast, too chaotic to be structurally supported. The data was already warning you the breakout had no foundation. And sure enough, that price starts to fade. 750 back to 650, 555, crosses back below the 548 average for about 80 straight intervals, 480, 460, 450. NIO just grinds sideways, but look at the FSR during this entire grind. 85, 90, 93, 95. The sideways trend is mathematically consistent. This is not a stock in free fall, it's a stock consolidating with structure. Then the right edge of this chart. Price breaks back above 548 average, climbing to 650 right now. US-China trade war tensions, tariff negotiations, and macro uncertainty. NIO is getting caught in all of it. But here's what the FSR says about this current move. Rolling FSR on the right edge is oscillating between 88 and 93. Not as clean as the consolidation phase, the current recovery has some choppiness to it. 65% overall score reflects that messy breakout peak dragging the number down. This is not a structural breakout yet, it's a stock trying to recover with moderate mathematical support. NIO is a pure macro trade. If US-China relations improve, tariff relief, trade deal progress, NIO is one of the first movers. It's liquid, it's widely held by retail, and it has a massive short interest that can fuel a squeeze. If trade war escalates, NIO goes back to 350 fast. The FSR won't save you from a geopolitical event, but it will tell you whether the trend has structural support when the dust settles. 65% predictability, 91% rolling. NIO is not a broken stock. It's a geopolitically sensitive stock with decent underlying structure. Watch that sliding window. If it holds above 90% while price stays above the average, the math supports the recovery thesis. If FSR drops below 80% on another leg down, the structure is gone again. Full data on the calculator at predictability-api.com. Link is in the description. Are you holding an NIO as a trade war play? Drop a comment, subscribe. Much more of these breakdowns coming all the time. Thanks for stopping by. I'll catch you in the next one.